Okay. So without wasting time, I want us to go ahead and dive into what we have for the day. And what we have for the day is how you can take trade and make profits as quick as possible with the simple trading methodology. We can call it scalping, how to scalp with the simple trading methodology. Now, again, I like to emphasize that the simple trading methodology is just an approach to Forex. It is an approach, it is not a strategy. The simple trading methodology is an approach to Forex. From there, you can craft out different type of trading strategy. Okay, from that single approach, you can craft out different trading strategy. Okay, and as time goes on, I'll be revealing different strategies as we move on. So today, what I want to share with you is just one of the strategy that you can use to take profit out of the markets. Okay, so what we want to do is we want to like scalp the markets. I call it scalping because we are going into the market and to take profit and leave the market. But the difference between what we are doing and the regular type of scalping is the regular scalpers, they trade the 1 minute time frame, they trade the 5 minutes time frame. But we are going to be going above these two time frame. Okay, we're going to be trading 15 minutes and 1 hour time frame. Okay, so let's go ahead and explain how we can trade with this strategy. So what you need to trade this strategy is two things. Number one, you need your chart type to be Aikinachi, and you need the 8 EMA. These are all you need to trade with this strategy. Okay, the 8 EMA and the 8 EMA and the Akinachi. Now we're going to be working with 3 different, you can take pen and write this down. So we need Akinachi and ATMA. We're going to be trading with 3 different time frame. 3 different time frame. Now, you get to decide which of these 3 time frame you want to use. There's going to be 3 time frame that are following each other, 3 sequential time frame. What I mean is, if we are picking 1 minute, for example, the next time frame that is common after the 1 minute is the 5 minutes. Okay, I know on TradingView you're going to be saying 3 minutes. They don't work with 3 minutes, not 2 minutes. Okay, so the next is 5 minutes. After 5 minutes, the next is 15 minutes. Okay, so these are the time frame that follow each other on the regular, especially if you are looking at MT4, MT5. So we're going to carry that method down to TradingView. Now, if we want to work with higher time frame, we can work with 15 minutes time frame, and then we can work with the next higher one is 1 hour time frame, and the next one is the 4 hours time frame. So these are how we want to trade with this strategy. So we're going to be working with these 3 different strategies, these 3 different time frame. Now, if you look at what we draw on our screen, you find out that this is like the higher time frame. Okay, HTF. This is like the low time frame. While this one here is like the one in between the low time frame and the higher time frame. So how do we work with this strategy, with this time frame? Okay. Now let me tell you the different use of each of these time frame. This higher time frame is for us to know the trend. Okay, not as if we want to know the overall trend of the market. We're not trying to know the overall trend of the market. What we want to get is just a bias. okay, the bias of the markets. Why we are using the medium time frame to get our entry. And then we're using the lower time frame to get our exits. The reason why we are using lower time frame for exits is because I say this is like scalping. So we don't want to stay in the market for too long. Okay, so we're going to be using the 15 minutes or the 1 hour to get to know, is this market going to go up or going to go down? Or right now, at the moment, what is the bias? We're not looking at what is the weekly bias. We're not looking at what is the daily bias. We are looking at right now, what is the bias of the market right now. That is why we are looking at this time frame, the higher one. Now, take note, you can also tweak it to be let me remove this. Okay, we can also tweak it to be, let me bring this one down, okay. So we can also tweak it to be, this one would be 1 hour as the highest, this will be 15 minutes, and this will be 5 minutes. Okay, you can also tweak it like this. Okay, 1 hour, 15 minutes, and 5 minutes. Okay, so my screen now is filled up. Let's start afresh. Now, like I said, the higher time frame is for us to get a bias. So let's pick an higher time frame. For example, now we have the 4 hours here. This is the 4 hours. Now we want to get a bias. Remember, the first thing we need to do is change our charts. So I can actually, this is where you change your chart. You click on this plus, okay? Okay, not the plus. Click on this pencil. Let's check the pencil. Oh, not the pencil. Okay, I think this, you click on this 3 button that is here. Okay, the 3 button, 3 dots, like the menu. Okay, now when you click on it, you click on charts. This is for the mobile, I think, okay, this is for the mobile app. Okay, the application. So you click on charts. Yours might be on candlestick. You want to take it to Akinashi. Now, once you're on Akinashi, you want to apply the 8 EMA. 8 EMA. For some of us who have the software already, we do not need to apply the 8 EMA again because it is already on the software. Okay, it is already on the software. If I close the 8 EMA and on the software, you will see that the 8 EMA is already on the software, but my screen is black, which is why I want it to be there. That is why I'm adding another one. Okay, so you want to add the 8 EMA. While you are adding the 8 EMA, you want to edit the settings. Okay, ensure on the 8 EMA, ensure this is the settings. Here should be 8, here should be EMA, and here should be 8. Okay, moving average exponential. Okay, now I believe we all know all of these things before. I'm just going over it again. These are the basics that we already know. Okay, Akinashi 8 EMA. Now, what do we want to do? The first time frame we want to look out is the higher time frame. So let's work with 4 hours at the higher time frame. Now, when we come here, what we want to look at is the current candle. We just want to see the current candle. Now, on the current candle, we want to know whether the current candle is a red candle or a green candle. That is all we want to know. We don't care where the candle position is. So maybe by that time you come here, it may be this candle, red candle. or by the time you came here on the 4 hours, it may be green candle. We don't care what type of candle, okay? But the only candle you must at all time avoid and don't work with is candles like this, doji, like this. Remember, on the price action course, we said that doji means what? Doji means the market is not setting indecision, okay? So you do not want to be taking trade where the market is on a level like that. Aside doji, what you want to avoid is candles like this. That is almost like doji. You want to avoid these candles, okay? That is almost like doji. If it's a weak candle, we know it's a weak candle. For example, this is a weak candle. We are good to go. This is a weak candle. This is a strong candle. We are good to go. This is a buy candle. We are good to go. We are good to go. Then for candles like this, no. It's more of like a doji. Okay? It's more like a doji. So we want to avoid this type of candles. And most times what will help you here is your instinct. Your instinct will tell you that that candle is a no-no for you. Okay, so for example, you come into the market and you see these candles, these are good candles. And then you are seeing this other candle. You know that these two candles here is a no-no for you. It's like the market is stuck at that point. The reason why you don't go for that candles like that, the momentum is very low, number one. And what it tells you is that the market is neither going up nor going down. So it tells you that at that level, the market is ranging. And you do not want to do this on a ranging market. Remember, you are here to enter the market and take out profit from the market. So you might want to leave the market at this point in time. But when you see this kind of candle, you can do what we want to do. When you see this type of candle, you can do what we want to do. Okay. So like I said, when you come to the charts, you just want to know if it's a red candle. For example, now the current is a red candle. Okay. But the current is a red candle. Let's work with that first. Let me give you the basics before I can tell you any condition. So now when the first time frame, the higher time frame is a red candle, 4-hour candle is a red candle, what does that tell us? It tells us that we want to go look for a sell opportunity on the next time frame, which is the medium time frame. That should be the 1-hour time frame. Now, what are we going to 1 hour to look at? Before I go there to 1 hour, let's apply a vertical line in here. Okay, so that we know where the demarcation between this candle and this candle. We are working with this candle. So what are we going to look for on the 1 hour time frame? On the 1 hour time frame, we are going to look for a sell candle. Remember, 4 hours is telling us the buyers to sell. So let's go look for a sell trade. So we're going to look for a sell candle that is cutting below the 8 EMA. That sells strong candle. It must not be a weak candle. It must be a strong sell candle where it's a red candle and the top is flat, and also it has a long wick. Okay, so it must be a candle like this, and it must cut below the 8 EMA. Okay, it was cut below the 8 EMA. That is what we are looking for us to enter a sell trade. Now let's switch to the 1 hour time frame. Okay, so you see, these are the points where we saw that the market gave us a red candle on the 4 hours. So if you move up forward this way, you will see that there is no signal for us to enter the market yet. on sell. Okay, there is no signal, and I expected this to happen, that there is no signal at this point, because I wanted to tell you before, and I said no, let me not tell you anything until I tell you what to do before I tell you the condition. Okay, the reason why I expected was because of the price action. I see that the market is pulling back. Market got to this level, it's pulling back. Okay, so coming here alone for the first time, if this is the current chart, this is the which of course this is the current chart. Okay, this is the current chart, the current candle. Coming here alone, what I see from this candle, from this three candle, is that the market is pulling up, and right now I'm getting a sell bias. The bias is sell based on the 4 hours time frame. But with this in mind, knowing that the market is pulling up, okay, you can see that the market is rejecting this level. Okay, you know the usual Akinashi that we know before. Okay, let me show you the usual Akinashi. The current candle is always lower than the previous one. The next candle will be lower than the previous one. Then you know that the market, yes, is going down. But when you see it like this, know that the market is what? It's going up. This is a pullback. There's a pullback here. Okay? There's a pullback there. Now, when I see the pullback, what I expect is that price may not fall down below. Price may go up. And that is like, if I pinch my screen together, I get to know that the market is on a general uptrend. Okay, but you can still work, you can still take the trade like that. So all we need to do is get our what? Our bias. Our bias is sell. And then we go to the 1 hour time frame and begin to wait for our strong sell candle below the 8th EMA. So when we have a strong sell candle below the 8th EMA, which has not occurred yet, this one is a weak sell candle, which has not occurred yet, what we need to do once that candle comes is to activate a sell trade on our accounts. I mean, your MT4, your MT5. All you need is to find out if the 4 hour candle is a green candle, and you get 4 hours is a green candle, and you get something like this above the ATMA, don't take the trade. Don't take the trade. For example, you see that the current candle on the 4 hours is a red candle pointing down. Okay. Now you see that there's a green candle cutting above the ATMA at this point. Don't take a trade. If you were to even look for a buy position, don't take a trade, because the 4 hours is telling you that the current bias is a sell. So you should not take this trade. You should not take that trade. So what trade do we need to take? The current bias on the 4 hours is that the market is a sell. So what we need is to wait for a strong sell candle to appear, and then we enter the trade. Now, when we enter the trade from the 1 hour time frame, remember it's 4 hour time frame for the bias, the trend. Then the 1 hour time frame for the entry. Okay, and then the next one is the 15 minutes time frame for the exits. Now, if we enter the sell trade when the second will appear, we now then scale down. To 15 minutes time frame. And on 15 minutes time frame, what we are looking for is the it's a sell trade you are entering. Okay, so we're going to be selling. So what we are looking for on the 15-minute time frame is the current or the first support that price is going to get to. Of course, we see this is the support. Okay. Now I just want to confirm my support by going back to candlestick. Let me see. Okay, so I want to put an horizontal line there, drawing horizontal line, and I'm putting it here. So I don't want to use this tip. Okay, you know, this is like a scalp trade. I don't want to use this tip. No, you know, this is scalp trade, and we need to leave the market as soon as possible. We need to leave the market at the best time. So we're going to want to be using here. Okay. Now let's go back. Let me take it back to Akinachi. So you see the way I switched to candlestick. I just went there to get an information and I go back to my Akinachi. So that does not mean that if you're using Akinachi, you're just on Akinachi all 247, okay? So you can also switch and switch back, okay? So that's my level. And I can say, okay, if this is the level, this is where wisdom now comes in. If this is my level, the original level, I don't even want price to get to the level before it takes me out of the market. What I want is to adjust my take profit up so that I'm sure price will hit my take profit before it will reject that level, because price may come here, reject this level and go up, or price may come here, use this level as support and go up. So, and I don't want that price to before price even get to that level, somehow reject that level and start going up. So I don't want that thing to happen to me. So since I've gotten my correct support there, I'm going to take my take profit upward a little. I'm going to adjust it upward a little. Sorry, my phone is okay. I'm going to adjust it upward somewhere around here. So I'm going to take it up. Aha. And then as soon as we get a set trade, the set trade may occur somewhere around here. The set entry may occur somewhere around here. And then when you enter the market, you are entering and taking your profit at this level. So this is just what is the guaranteed, that this thing is guaranteed to occur. Let's open, because if you are watching this video, it means you have the software. Let me open the software. What I want from the software is the automatic support and resistance line that is on the software. So let's just open the software. Okay. Now, this is what it's even telling me. It's telling me that the major support on the 15 minutes time frame is here. This is the major support, because by the time we're going to be having the sell signal, is going to happen somewhere around here when price has broken this one. So it's telling me that it's going to sell down to this point. Not even this, because there's no support there based on the automatic support and resistance. So even if I'm to use this, which is, let me confirm that, I'm coming. Let's add another one there. Another horizontal line here. Okay. Now let's fall back to 1 hour and see how it played out on 4 hours. Okay. So on 4 hours, you see the level here. This is the level it's coming to reach. And I would not want price to even get to this level. So what you will need to do, you know, we have not gotten the signal yet. So we have not gotten the signal yet. But when the signal comes like this, okay, when the signal comes like this, what does it tell you? What does it, if this is sell candle, what can you now see on the chart? You will see that price from down came up to this what? Support, went up and touched resistance. Now it's going down, form the sell candle. Most likely, price will fall down, touch this level before either breaking it or going up from here. So this is our level. Okay. Now, remember, we do not work with a major level. We do not want the price to pull up. So I'm going to increase. I'm going to adjust that level upward. Okay, I'm going to adjust it upward. Okay. So this is where, when the signal comes, we want to bank from here to here. as take profits. Okay, let's check the 4 hours time frame. Okay, so the 4 hours time frame is telling us that this is the what support. So when we get that move, where we are moving from is from year to year. Okay, now I want to show you this on another point on the market. Let's go to another market. Let's go to gold. It happens anywhere, anytime, any pair, any asset type. Let's go to gold. I use it on gold as well. Okay, so this is 4 hours. Now let's work with this because I think I got an opportunity here today even. Okay, let's work with this. This is a green candle. Okay, now when you see this green candle, we're working with this candle. When you see this green, this is on the 4 hours, we get our bias. That the bias is what? A buy bias. Okay, the market is going to go up. We fall down to the what? To the 1 hour time frame and get a buy candle above the ATMA. And that would be this candle by the time you come here. That would be this candle above the ATMA. Okay, so when you get a buy candle above the ATMA, you fall down to the 15 minutes time frame to get your take profits. Okay, so these are the level where we are getting the entry. So this is the resistance at the time. So you want to use this level. Maybe by then it will be this level or this level. Okay, so you want to use, let's say we're using the second level, for example, maybe this one is not visible at the time. You want to take your profits. Okay, this is the level, but then we do not want to use that exact level. We are going to bring down our price a little, our take profits before that level, because we want it to must hit the price. So when we use that to take our take profits, let's go back to the 1 hour where we activate our buy trade. So you see that we get the buy signal from here, it's going to hit here. Now, one thing you see why I call this cap, you see why I call this cap, most often the candles from your entry to your take profit is no more than 3 candles. So if you are on the 1 hour time frame for your entry, it will not be more than 3 hours price will hit your take profits. No more than 3 hours. Sometimes even if it's more than 3 hours, one thing you are sure of is that price will hit your take profits. Okay. Now, what you want to do here is when you are entering your buy trade, you are not entering with your very low lot size, unless you are trading on goods, for example. If you are trading on gold, you're going to be entering with your very least lot size. You know how good is. Small lot size is going to give you big profits. Okay, so on gold, you can enter with your least lot size, like 0.01, for example. If you do this on the 1 hour, if 1 hour is your entry on gold and you use 0.01, you can cash out $8 from that trade. $8 to $10 from that trade. If your entry is 1 hour, you're using 4 hours as your bias, you can cash out $8 to $10. Just ensure that you do not use the exact, this is the major resistance. But don't use the major resistance as your take profits. Please, you have to use before the resistance, anywhere before the resistance as your take profits. Because you are going in, let's forget about gold. Let's say, for example, you're trading USD JPY. Okay, most of the times what I do personally, when I get a signal like this and I know that, you know one thing about the strong buy candle or the strong sell candle below the ATMA, one thing about it, or above the ATMA for this instance, one thing about that candle is that that candle is an high momentum candle compared to the previous candle that was happening before. before I can actually show you that this is a strong buy candle and above the ATMA, what it is telling you is that the momentum at that time is high. That price is going to be rallying towards the direction of that candle. And it's not going to be moving small, it's going to be moving in a good pace. So when I enter such a trade, I don't enter, for example, I'm trading USDJ per normal currency pair. If I'm trading normal currency pair, I can enter with a big lot size, like scalping, okay? Enter with a big lot size and take my profit for that day. I'm going to enter with with a lot size that one single profit will make me decide not to trade again for that day. I'm done for that day. That trade has given me all I want from that day. It has given me maybe probably 10% of my account. Or, sorry, let's say 1% of my account, not 10%, 1% of my account. And I decide that I'm not trading again for that day. I'm done for that day. Then you can always do it over and over again. Okay? You can always do it over and over again. If you do it on this pair, you can go on another pair and do it again. Even this particular pair that you did it on, you can still do it again on this particular pair. Again, then you just want to be to ensure that the candle that you are going to enter, see, your entry candle that is the 1 hour candle must be a strong candle. For example, this one now, if at this time you check the 4 hours, maybe you did not see this chart when you came to the market, is this candle you are seeing, okay? Maybe it's this candle you are seeing when you came to the market on the 1 hour. Now you check your 4 hours, which is the first candle, the first time frame you're going to check, and 4 hours is telling you buy, which is a green candle, so you know it's going to buy. Now you come to 1 hour to get what? Your entry, but now there's no entry. There's no entry. Why? Because the current candle is a weak candle. So this is your entry. The next candle that is what? A strong buy candle above the ATMA. That's your entry. So this is your entry. And remember, we're going to be using not the 1 hour. Let's adjust this. We've gotten our entry. Okay. We've gotten our entry on this candle, which is this candle. Now let's adjust our take profit with a 15 minutes time frame. So this is where we got our entry, somewhere around there. So our take profit, this is the current resistance, okay? So our take profits will be somewhere around there. Somewhere around there, okay? And then when you go to your 1 hour, already you execute your trade already. It doesn't mean where to execute. You can execute for many time frame, okay? Most of the times, the back testing will not really give you the correct take profits, okay? But let's just leave it at that, okay? That's just it. I believe you understand what I'm doing. Again, for emphasis, you are just going to the 4 hours, okay? The 4-hour time frame to get a bias. We do not need the 4 hours to be above the ATMA or below the ATMA. No. All we need 4 hours to be is that it is not a doji candle. If it's a weak candle, it's okay. If it's a strong candle, it's okay. But what we want to confirm is it a green candle or a red candle? If it's a red candle, we want to fall down to the 1 hour and look, okay, on the 1 hour and look for a buy signal. A buy signal is a strong buy candle above the 8 EMA. A sell signal is a strong sell candle below the 8 EMA. When we have entered the trade, we want to fall down to the next lower time frame, the 15 minutes time frame, to get our exit from the closest support or the closest resistance. That is the strategy. It works on all pair. Okay, so let me hear from you. Have you been following up? Do you understand what we are saying?
Yeah.
Yes, 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 yes,
Yes, sir.
Amazing. Do you have any question where you don't understand? Okay. So one thing you want to avoid is, unless you enter the trade with the correct the normal regular lot size for correct risk management. But if you increase your lot size to enter a trade like that, one thing you want to avoid is staying on the trade for too long. Don't stay on the trade for too long. Don't allow price to get to any, like for example, let's see this. Like you see this, if you are entering based on this candle, the last resistance is this. You don't need price to get to that last resistance to say maybe price will get to that resistance and then pull back. No, price must not touch, your take profit must not be up to the resistance before you leave the market. Okay, because you are going, is like scalping, and you are going in with bigger lots to take big profits from the market. You just want to go in, take big profits, and the thing is like 80% guarantee that this thing is going to turn out on profits for you. So you want to, first of all, don't go in with excessive big lot size. It's not correct. It's not wise. It's not recommended. Okay? It's not recommended. One thing you must remember in Forex is any amount of profit you want to make, you should also be comfortable losing that amount of money. If you're not comfortable losing that money, don't take that trade. Okay? For example, if you can be going in with small lot size, small lot size, small lot size. But let's say you have $100 before. Your original capital is $100. Now you have successfully grown your capital to $120. Now you now know that you have $20 to risk. Okay, you have $20 to risk. You can take the risk, but your loss should, you can say, okay, I want to lose like $10. I want to risk like $10, because if I lose $10, it will not pay me so much, because the $10 was from my profits, okay, not from my capital. It's not pay me so much. Okay, not that your loss will go and give you $50. If your loss is giving you $50, it's too much. It's too much. So, and one thing you should understand is you cannot be targeting $50. If you're targeting $50, it means you can as well lose $50. And if $50 is too much for this account, don't target $50 profits. I always tell people, how much are you willing to lose? For example, now, if you are willing to lose $20, okay, and let's say you have 2 times to trade, okay, maybe if the first one goes on loss, you can like, okay, analyze the market again and do it the second time, which for a sanctity, if you follow the principle, the second one will put you on profits. So it means you have to trade 2 shots, and you have just $20 to risk. So divide your $20 into 2, which is the first trade you are risking $10, second trade you are risking $10. The first one might go on profit, you make your profit. And when you are risking $10, what we mean is your targeted profit should not be above, let's say, $10 or so, around $10. Your target profit should be around $10. If you target $50 profits, sometimes your loss could also get to your what? $50 loss. Unless, because I don't want to show by this, like what I've talked to you so far, I've not talked to you about stop loss. 90% of the time I trade with this strategy, I don't trade with stop loss. I will tell you why I'm coming there. And I will tell you how to also activate your stop loss if you want to use stop loss. Okay? So be very careful what you are risking on a trade like this. Okay? Don't be too greedy. Your greed might make you lose money. So what I was saying is, if you're entering on the market like this, don't allow price to your take profit to be the resistance. Okay? So what we are doing here, We are cashing in this strategy. What we are doing here, we are cashing the momentum on this particular candle that caught above the ATMA. We are cashing the momentum on this particular candle that caught below the what? Below the ATMA. Okay, and we are not using the support of the 1 hour, our entry. We are not using the support of our entry. We are going to the lower time frame to get the support from the markets, okay, or resistance for our take profits. Sometimes it may mean that all you could take from the market is not much, but you know that your take profit is guaranteed. Price must surely eat your take profits and leave the market. Maybe if you enter the market on your $100 account and you find out that your take profit is very short, it's not so far, somewhere around there is your take profit on the 15-minute time frame. If that is your take profit, for example, and you are targeting somewhere around here, and from your entry to your take profits is giving you just $3, it's okay. Take it and leave the markets. Take it and leave the markets. Now, why I don't use stop loss and take stop loss on this? Remember, what we are working with is what? The high momentum candle. And we have confirmed that the higher time frame, the next higher time frame is still based on this direction, buy direction. So we have confidence that the market is going to go up. However, we always know that our stop loss is below the last swing high or the last swing low. That is your stop loss on this buy trade. So you want to watch your stop loss. How much are you losing? If price you go hit your stop loss, you want to be careful. Now, another thing you want to know is that, please, this one is tricky, but understand this. You have two stop loss level, okay? If you on a trade like this, because we don't want to use this stop loss on a trade like this. If you are using stop loss and that's for you if you are using a big lot size. If you are using this stop loss and you're using a big lot size when this is your entry, most likely your stop loss will put you on a bigger loss. So we don't want to use that stop loss for you. Okay. Now I want to show you something. I want to draw another horizontal line. This is your entry candle, right? Yes. The strong candle. Now what's the last candle? This is the last candle. Let's put our stop loss below the base of that candle. Below the base of that candle. Now, I want you to watch something. This is where we are starting from, okay? This is it. So this is what we're talking about, okay? This is our entry candle. Let me put an arrow under our entry candle. Okay. Now let's switch to candlestick. Let's see something from the candlestick. Japanese candlestick. Aha. On the Japanese candlestick, this is our entry. This candle is our entry. So what I'm showing you this is sometimes even below this candle. Let me go back. Let me even show you. I was trying to place it, but let me show you something. I'm going to draw another one again. Okay, I'm going to draw another one again. another, I'm going to draw another horizontal line. Now this horizontal line, I want to put it below the entry, the base of the entry candle. Below the base of the entry candle. Now what I want to show you is this. The reason why I'm switching to Japanese is because Akinashi does not display real price, okay? Now the reason why I'm putting this here, remember this is for stop loss as well, okay? Now, anything that makes, this is the entry candle above the ATMA, anything that makes price to fall down this level, price has changed direction. That's the simple truth. Anything that makes price to fall down below this level, price has changed direction. For price to even come to this level at all, it has changed direction. It's no longer a buy market. Okay? So let's go back to the Japanese candle. Now on the Japanese candle, you see it's still under this candle, not under the entry candle. This is the entry candle. So the two levels I draw was under the previous candle. You can use this level as your stop loss. Why? Because anything that make price come here, price may have begin to head downward. Okay, price may have begin to head downward. So you want to use those for your level. Okay, but you see when you take your entry, price went and hit your what? Your resistance, your take profits. Which of course we are not using this particular level direct, we are using before that level as our take profit. So you are banking on this candle to take your profit, okay? Or these two candles to take your profits. When price starts changing color and you are still on the trade, maybe because you did not set your take profit correctly, even on Akinashi, leave the market, please. If price starts changing color on Akinashi, not on candlestick, please, on Akinashi, leave the markets. Leave the markets. If you did not close on profits, maybe because you did not set a take profit on time or so, and you see a doji like this, it has changed color. Whether it is a green doji or leave the market, please. You have to wait for another opportunity to bank in the correct profit. If you did not set your take profits correctly, leave the markets. Once you start seeing change of candle. But like I said, this is not a strategy to stay too long on the market. You just want to go in. You just want to go in. So you see what just happened is 10 o'clock. My alarm just rang for me to go check the market. So I check the market every 1 hour. I don't spend time on the market when I check the market. Just less than 1 minute. I know whether to buy, sell, or then trade. Okay. So we are not coming here to stay on the market for too long. It's a scalping strategy. You can go in with big lots, but not so much big lots. You have $100 and you are trading 0.01 on that $100 account. And you want to try this strategy, you can go in with 0.03 on, yes, 0.03. You can go in with 0.03, 0.04, maybe 0.05, and try what you want to try, bank in the profits and leave the markets. But don't go too big. If you go too big, not as if you will not make the profit, you will make the profit. But the question is, the reason why you should not go too big is because of consistency. You don't want a situation whereby you make the profits today, make the profits tomorrow, but the day after you're going to lose big. No. We want a situation whereby we'll make $2 today, we'll make $2 tomorrow, the following day we'll make $2, we'll keep making that $2. Okay, even if we lose $2, it does not affect our accounts. $2 and $20 is not the same thing. Okay, so let's just obey the rules of the strategy. It works 100%. Try it out on a demo account and even on volatility indices. That's the main reason why I did not put our buy and sell signal here. Because most times you may even get the buy signal on this candle. on the entry candle. I mean on the entry candle. Now, the 4 hours candle or the higher candle time frame that you are using to get your bias, you do not need to get a buy or sell signal on top of it using the software. You just need to know that it is a buy candle or a sell candle, is a green candle or a red candle. Then when you come to the 1 hour, which is your entry time frame, you can wait to get a buy signal or a sell signal. And when you get a sell signal, enter the trade like this and go to your 15-minute time frame to exit based on the the nearest support and the nearest resistance. So you can apply your what? Your software and work it out with your software. But the reason why I did not use software for this explanation is because if you are using this strategy on derive, okay, or you call it derive, you will not have the software to work with. All you have is Akinashi and ATMA. Even this automatic support and resistance will not be there. It is you that will use your eye to draw the support, the nearest support to take your profits. Okay, so that is why I did not want to use the software, so that it doesn't look as if you can still do this anywhere. You can do this anywhere. Okay, so long you can have Akinashi charts and ATMA. So that is it. Thank you. Please let me know if you have any question. Let's answer your question. Are you following? Let me know if you are following. Did you gain value from this session?
Yeah, we are following. Yes, what we just explained that. I think I did that early morning.
Amazing.
Within early hours of was it GBP and AUD there about? But it was early morning, around that. I'm talking about around that 4 or 5. I did that.
Okay.
Yes, I think I was able to make a little profit. At least
to make profit. Amazing.
Yeah, with little lot size I think I use about two lot size 0.02. I think I made almost like $7 thereabouts.
Amazing.
Amazing. Yes, and there's the one I did again, which I lost, but I have to recover it back again during the daytime. I have to recover back to the daytime when I was able to. When I was less busy. I think what you just explained, I understand what you explained to me. I think I captured with that. I've practicalized and it works.
Amazing.
Without using the software.
Yeah, without using the software.
I did that early morning.
That's amazing. That's amazing. Any other observation, question, comment? Thank you so much. I appreciate you.
Secondly, again,
hello.
Okay, let's allow the first speaker to complete. Go ahead.
To use this, the best period of the day to use this strategy, or just any time of the day?
Any time of the day, you can find, maybe if you want to find your best time to trade, go find your best time to trade and apply it on your best time to trade. But like I just said now, you are just going to the 4 hours to confirm your bias and 1 hour to get your entry, like that. You can use, if you have your own best time to trade, you can use it like that. Or you can try it on the New York session, the opening of the New York session or the London session. Try it and see how it works out for you.
Okay, thank you, sir.
Hello, Super Professor.
Hello.
There are some things I drop a message on the normal chatting group. Yeah, okay. I was asking that don't you have a signal group? Yes, some of them may be busy sometimes. You understand me? Maybe during the day, you may not have time to look at the chart and do 1 or 2 things. You get my point. So I was asking, is there no signal group which is being created by you? Whenever there is a signal, some people can make use of it.
Somebody can subscribe.
Yes, and with that signal group, you can just, and also it depends as each individual can apply it can apply the signal with its own lot size. That's what I mean. So
yes, I
that's
understand
my
the
own.
question.
Yes.
First of all,
Yes,
usually I'm not the fan or the kind of person that likes to give a signal to other people to trade, because I believe like trading is a personal kind of thing sometimes because of the emotion that surrounds trading. For example, I may give out a signal now, and although there's the stop loss and take profits, there maybe even me sometimes I give that the signal. I may not even finally stay on the trade to the end of the trade. I may just enter and leave the market, close my own on profits, or maybe I may not even enter the trade. Or let's say I enter the trade. Signal that is supposed to give us, let's say, $100. It will give me like $1, $2. I leave the market, but I gave that signal to a lot of people because I'm no longer on the market again. I begin to feel somehow those guys are on the trade, so it used to do me somehow. And I just believe that those guys, my mentorship group, the major thing they are coming here to do is to learn how to do it themselves, not depending on people. Because when you are working with Signal, you still depend on someone to tell you what to do. But anyway, what I'm doing, I'm really working hard so much, trying to fix one or two things to ensure that I start giving signals. And I know before 2 weeks time, giving signals maybe nearly every single day. Nearly every single day, I'll start giving that signal before the next 2 weeks. I may start giving that signal every single day. And my signal will be coming from the 1 hour time frame. I prefer trading 1 hour time frame. 1 hour time frame. Well, that's where my signal will be coming from. So that is it. So when I drop the signal on the group, all you do is either you go take the trade directly or you analyze the market based on the signal to see if you are having a corresponding signal from what I'm having. If I'm giving signal, my signal is always from the same simple trading methodology and the software. That's where I give my signal. I also have a signal community where people pay money to get signal. But I think I post it. I've not given them signal for like a week now because of what I'm trying to fix, so that I'm always there. I'm always showing up, giving them signal. I just need to fix that. So by 2 weeks time, you start getting signal from me.
Yes, Elisa. Yeah, concern what you just explained now. I think you really throw more light. So I don't know if the signal may not be free. Normally, we can pay for it. Some people pay for a month. Some people pay for 4 months, 6 months, lifetime. So it also depends how, as the boss, how you actually want to.
My signal that I give out is just $5 per month.
$5 per month.
Yeah, $5 per month.
Okay. I think that is okay. And if it's on Telegram, it's the best because it's on Telegram, you can set your own signal alert. Now, whenever the signal comes out, your individual can at least, since a ringtone has been set, I think Telegram is the best to me, which I believe. Telegram is the best.
It's going to be
so when the signals, yes, if it's dropped on the Telegram, yes. And no, WhatsApp, most people will be carried out with WhatsApp. WhatsApp comes with a lot of message. But in Telegram, once it's set on Telegram, it's left for individual to personalize their account, to customize the sound on its own, to your own suitable sound, whereby when the signal drop, a ringing tone will alert you that you yourself will know that this is a signal, you will know. Because it will be quite different from other ringing tone, from WhatsApp, from ringing tone. It will be quite different. I think Telegram is the best on the market, on the gold. So on the process, I think I was having almost like probably 90 as a capital thereabout. Yeah. Then I entered the market. Then I suddenly, I believe the trade was so much. Suddenly, I was kicked out. I actually want to press another one. Then it's like the market kicked me out. You understand me?
Was it stop loss?
They were, yes, stop loss, everything had been set. Suddenly, I was kicked out. And I tried to place another one again on it. Tried to place another one again. I think the other one, was going, then within a few minutes, it goes off again from the market. And I realized that it's like the spread was so much. I don't know. That what I feel, and the capital. Can it be?
Gold is not like USDJPY. Okay.
Yes, and yeah.
One peep movement for gold and for US and for normal forex pair will not give you the same profit in dollar and the same loss.
I am aware of that. Yes, sir.
That is the major thing to understand. Which is why if you have a low capital, don't trade gold. If you want to trade gold, have at least $100 before you trade gold. Minimum $100.
Yes, I was up to that, but something went wrong. I was adding up to that. I don't know what really went wrong. When the market kicked me out.
You set a stop loss, right?
Yes. But I still lost. I lost.
Yes, now. Stop loss is for loss. Stop loss is for loss. Meaning that you are going to close on loss.
Yes. When the market kicked me out, at the end of the day, I still lose like $6. And I still lose like $6. Yeah, $6. Yeah, I lose like $6. But at the end of the day, I was still able to recover my loss. That just it. I recovered my loss and I still make extra $4. Yes. Which I did.
You're on track.
Yeah. So that was it, sir.
Okay, any other question?
I want to ask how we can sign in on evaluation on 10 trade. I've been trying it this week.
What you need to do, you have an account verified. All you need to do is know the amount you need to purchase the account. If it's $29 that you want to purchase $3,000 account, just go and deposit the money. Deposit $29 to your account.
Okay.
To your wallet. Once you have deposited, the next thing from there it will not take you more than 1 minute. You apply.
Okay.
But if there's no money on your account, you cannot apply. There's nothing you will do. Nothing will work.
Yes. Okay. All right. Thank you.
Yes, sir.
Okay, boss. Just let us know when you are able to finish up with the signal issue. Let's keep us updated on that, sir.
I will do that.
Thank you, sir.
Yes. Okay, everybody. If there's no more question, let's round up the session for now. I'm going to drop the recording on the group. So we are going to get the recording.
Okay, sir.
Okay, everybody. Thank you very much. I appreciate you. Good night.
Yes, sir. Good night, sir.
Good night, sir.